What is good? Tape chasers and freedom hounds. It's Juneteenth. Markets closed, no live action, but the thesis never clocks out. Welcome back to the trading floor. I'm Wildcard, and with me as always is my analytical anchor, TB.
Quick disclaimer, nothing we say is financial advice. Do your own research. We're two guys talking markets, not telling you what to buy. Now, the tape is dark, but the overnight setup is screaming one thing.
Yesterday, the Qs rallied 2.5%, but the VIX climbed more than 2.5%, settling above 16.5. That is the market taking a lie detector test, and the needle is bouncing. The options market did not believe the equity rally. It hedged it. If VIX holds above 16.5 in a Monday, any gap down turns into a flush, not a dip.
And the backdrop is three realities that cannot all be true at the same time. 1. Kevin Warsh just delivered the most hawkish Fed chair debut in memory. Dollar at a 13-month high, Bitcoin crushed to 63,000, gold bleeding. 2. The artificial intelligence semiconductor complex is ripping. Stocks up 6%, Micron up 9%, Qs punching through as if rates don't exist. 3. The Iran peace deal is unwinding oil stocks. The energy sector ETF down nearly 6% on the week. The market is pricing a hawkish regime, an unstoppable capex party, and a geopolitical reset all in the same breath. Something breaks.
We're going to figure out which narrative cracks first. That's the show. Let's get into it. Top story is the Warsh regime shift. And this is not just a policy tweak. It's narrative demolition. Kevin Warsh walked into that presser and in 40 minutes erased 18 months of dovish pricing. Bloomberg Mill have called it a regime change for United States real yields. That's exactly right.
The fingerprint is the Bitcoin-to-QQQ divergence. Bitcoin dropped to 63,000 in the same session the Q surged 2.5%. That's not noise. It's capital fleeing unregulated speculative assets and rotating instantly into cash. Flow positive regulated large cap tech. The dollar hit a 13-month high, which supports that rotation but crushes commodities in emerging markets. Gold is bleeding lower alongside crypto.
So you've got a liquidity squeeze on anything that doesn't yield cash now. And here's the canary. Accenture, ticker, ACN, hit a 52-week low yesterday. That is not random. Accenture is the bellwether for duration-sensitive, mid-market IT spending. When rate expectations shift this fast, real economy tech budgets freeze. The Warsh hawkishness is already hitting Main Street's tech shops.
And it's not just a macro abstraction. The dollar strength makes every international revenue stream worth less for United States multinationals. But the rotation into large cap tech says the market still believes the artificial intelligence spend is immune to rates. We'll test that.
Quick check on earnings. There are no notable reports this week that will move the macro tape. So, we're moving on. No manufactured coverage.
Economic calendar, though, has some global triggers that feed the Monday open. Wednesday, June 24th, the Bank of Japan's core CPI, previous 2.8%. That is the yen carry trade fuse. If it runs hot, it pressures the BOJ to hike, which strengthens the yen and accelerates carry trade unwinds.
And today, Friday, the United Kingdom drops its unemployment rate, the Bank of England rate decision at 3.75%, and consumer confidence. The BOE is expected to hold, but the language matters for global rate trajectory. Then Saturday, the real wires hit. United Kingdom retail sales and German PPI. Both can move European futures Sunday night and color the United States Open Monday.
Keep Saturday's German PPI on the radar. Prior 1.7%, consensus 2.5%. A hot print reinforces the global hawkishness narrative and strengthens the dollar further. That would squeeze commodities and emerging markets again.
Sector rotation paints the same picture. Over the past week, tech, ticker XLK, led at plus 4.49%. Industrials, XLI, up 3.29%. Financials, the financial sector, up 1.81%. Meanwhile, energy, the energy sector ETF, got smoked, down 5.86%. Healthcare, XLV, down 3%. Communication services, XLC, down 2.38%.
Money is fleeing commodity and late-cycle safety plays and piling into rate-agnostic growth and industrial reshoring. The energy sector ETF crash is a direct result of the Iran peace deal narrative colliding with a strong dollar. That rotation is brutally clean.
Overnight, Asia gave us a mixed picture. The Nikkei up 0.25%, but the Hang Seng dropped 1.59%. Shanghai Composite down 0.4. Europe was tepidly green. DAX up 0.33%, FTC flat. No strong directional lead. The plumbing, dollar-yen flat, minus 4 basis points, so the carry trade is stable for now. But the unwind risk is the macro elephant in the room.
China and Hong Kong softness continues to be a drag on global risk appetite. That feeds the safe haven bid into United States large caps. The Hang Seng down 1.6% reinforces the rotation story. International money is voting for the United States as the safe harbor, especially the big tech names.
Now the portfolio hot news. The semi-paradox. The bull case has real legs. Micron, ticker MU, ripped 9%. The memory cycle is real, driven by artificial intelligence data center demand. Pricing is tight. ASML, the only true pure-play picks and shovels monopoly, has deep durability. And TB, you grabbed Marvel on your Wave Trader algo.
The Wave Trader algo scanned 900 signals yesterday. It took Marvel, the networking semi-play, not a compute chip. The networking backbone. Artificial intelligence networking spend is non-negotiable and more insulated from enterprise IT budget cuts than application layer software. I have 10 positions open total, cycle P&L up about $2,500, account at 112,915.
That's the smart side of the semi-trade, but the bear case is sitting right in front of us. Intel jumped 10% on an Apple chip partnership. That is a press release pop, not a structural breakout.
Intel has been bleeding process node leadership for years. One chip design partnership with Apple does not fix foundry profitability or reverse years of burning cash. Failed that rally.
And the canary is Accenture's 52-week low. That tells you enterprise artificial intelligence deployment is hitting budget friction at the application layer. The hyperscalers can buy all the GPUs they want because they have balance sheets, but mid-market companies cannot afford to build the software layer on top. If the shovel orders, semis, keep flowing, but nobody's building the gold mine, the shovel orders eventually slow down. That's the crack in the semi-thesis.
The safety is in the data center backbone. Marvel, ASML. Be very cautious on anything tied to enterprise IT spending. If Accenture's warning bleeds into broader sentiment Monday, watch how IWM opens. Small caps are rate sensitive. Accenture plus Warsh hawkishness is a 1-2 punch for the application layer. Those are smaller companies, and small caps are already the most rate-sensitive pocket of the market.
If IWM loses $292 Monday, that's not just a move. That's the confirmation the Warsh regime shift is hitting Main Street, not just Wall Street, but we'll get to levels.
One more layer on the peace deal unwind. The Iran deal dropped a $300 billion reconstruction fund, United States forces out in 30 days, oil sanctions lifted. But the 60-day free Hormuz passage is a timestamp, not a structural reset. Goldman Sachs says Hormuz shipping recovers to only 70%. The next round of talks is already delayed and Lebanon clashes are worsening. Bill Ackman flagged that the Hormuz exposure is still a strategic risk.
If Lebanon escalates over the weekend, oil gaps up. Monday before anyone can react. The energy sector ETF at these levels could bounce 3 or 4% on a talks-delayed headline. My paper account is sitting in almost $10,000 cash. I am not chasing into a weekend with VIX elevated and Lebanon simmering. Patience is a position.
My paper is submerged too. I have BYD at $84.68 and the energy sector ETF at $53.77. Both underwater, but neither near my stop. I'm sitting on my hands through the noise. No adding, no closing.
Quick nuclear check-in. Second reactor breakthrough in the pilot program this week, and Deep Fission 1 PO'd at $16. Standard Nuclear is filing. This is a long-term thematic tied to artificial intelligence power demand. Every hyperscaler is looking at nuclear purchase agreements because you cannot run a data center on solar alone. Not a trade yet, just a watch list sector.
And that's where the levels come in. What we're watching Monday.
Here's the close. 3 concrete numbers. First, the SPY. Resistance at $748. Rejected twice hard. That is the brick wall. Second, the Qs. The new floor to hold is $740. Needs to confirm the rally. Third, and most important, IWM at $292. That's mechanical pension rebalancing, not organic rotation. If it fails, the small cap rate sensitivity thesis confirms the Warsh hawkishness is hitting real.
And the weekend wildcard is Lebanon. If clashes escalate while markets are closed, Monday's open is a whole different animal. Watch oil futures Sunday evening.
We'll be watching. My paper sits in cash, My TFT algo is flat, and I'm not chasing anything until the tape gives us a real signal. Keep your head on a swivel, family. Markets may be closed, but the analysis never sleeps. We'll see you Monday. Trading family out.